Ever wonder if there's a simpler and safer way to protect your money offshore? Well, I've spent the past 20 years banking internationally, learning firsthand how to avoid costly cross-border mistakes, and helping over 1,800 clients securely set up their international accounts. So in this video, I'm going to share 27 lessons that'll make going offshore smoother and 10 times easier for you. Lesson number 1. Have you ever noticed that most banks from your home country hate when you travel? When I first moved abroad in my early 20s, I had to deal with blocked transactions, questions about transfers, and they even canceled my bank card 3 times in 6 months, telling me it was for my own protection. All because I was trying to use my account, withdraw money, basically just cover day-to-day expenses. Now, I was young, probably a bit naive, and didn't know all the lessons that I'm about to share in this video. So lesson number 1 is that your home country bank won't help you overseas because it's not set up to support cross-border clients or international transactions. So the sooner you open an account that matches your lifestyle, the less headaches and problems you're going to have. Lesson number 2. Most people think all problems they encounter with their home country bank are solved as soon as they open their first international account. But that only happens if you're really lucky. And I wasn't. My first overseas account was with a big international bank, a UK bank. And you know what? The onboarding process, document requests, and supporting details I had to provide were way over the top. Knowing what I know now, I would never recommend that one of our clients goes through this process. It just doesn't make any sense. And frankly, there are much better banks available with a lot less hassle. Now, I closed that account a few years later because even after that account was opened, the bank continued to demand more supporting documents, regular compliance updates, and was just way too difficult to deal with. So lesson number 2 is be careful where you open accounts. And if you do this, you'll save yourself a lot of wasted time and effort, which you can direct to the right banks instead. Lesson number 3. You usually know what you're looking for from a bank before you decide where to open. So before applying, make sure the bank you choose meets those requirements. I learned this the hard way. I opened a bank account in Hong Kong for a company that I owned, and I needed to make payments. But there were 2 huge problems. First, the bank didn't allow me to send international transfers through online banking. And second, I didn't live in Hong Kong. At the time, I was living in Singapore. So I literally had to get on a plane, fly to Hong Kong, execute payments in person at a branch, and then withdraw uncomfortable amounts of cash and carry it back to Singapore. Needless to say, I closed that account and opened one that I could actually use remotely instead. So lesson number 3 is confirm banks meet your needs before opening, because otherwise you might get stuck flying back and forth between countries just to send regular payments. Lesson number 4. You never know when your bank is going to start de-risking, reassessing client accounts, deciding they don't want you or your business as customers anymore. For personal accounts, this can be citizenship, residency, source of income, while for business accounts, it could be the country of registration, country of operation, or even the industry of operation. And a really good example of this happened just last year. You've probably heard of Mercury Bank, right? It's a digital banking platform that a lot of foreign-owned US LLCs use for banking. But the thing is, Mercury isn't really a bank, which means they rely on other banks called partner banks to take their deposits from their customers. And last year, Mercury's partner banks went through a massive de-risking campaign. They changed the customers that they're willing to support, and that resulted in thousands of client accounts being closed. These business owners were left without accounts, and many of them couldn't meet their requirements of opening at other banks, killing off a lot of businesses. And that's why lesson number 4 is always have backup accounts. That way, if your main bank account gets closed, you'll always be able to keep receiving money and sending payments. Lesson number 5. Think of a time when you met someone and they gave you a bad feeling. Maybe how they talked, maybe how they looked, the way they shook your hand. Well, that happens with banks too. And when you get that feeling, you shouldn't ignore it. This happened to me one time in Panama. I went with 2 colleagues to sit down with a new bank. We met their entire executive and banking team. We listened to their whole presentation, asked questions, dug into their operations, but something felt off. As we left the building, one of my colleagues turned to me and said, "Something about this feels like a Ponzi scheme." And he was right. It was too coordinated, too rehearsed. It didn't feel like a normal bank conversation. And because of that meeting and that feeling, we never recommended that a single client of ours open at that bank. And guess what? 18 months after that meeting, that bank was shut down by local regulators. So lesson 5 is trust your instincts. If you get a bad feeling from a bank, walk the other way, because it could save you a ton of stress, lost funds, and even thousands in legal fees as you try to get your money back in the event of a closure. Now, before I jump into lesson 6, just a quick reminder. If you want our team to tell you which offshore banking hubs you can access, Click the link in the pinned comment and fill out your assessment. It's 100% free, takes less than 2 minutes, and our experts will tell you where you qualify to open. Okay, lesson number 6. I realized early on that you pay for banks one way or the other, and this changed how I looked at banking forever. Because lots of banks promote fee-free accounts or low fees. Even some offshore banks do this. And what that means is they're going to be using your money in other ways to generate revenue for the bank, since they're not charging fees. So they're either lending it to retail or commercial borrowers, or they're going to be managing it in the markets themselves. Obviously, certain banks are better than others at doing this, and there are lots of banks in the world that offer free accounts that are worth considering. But if you're looking for a place to store wealth, to custody assets, these fee-free banks are often not a great fit. Instead, if you're going offshore or looking for international accounts, we typically suggest avoiding these types of banks, because they're often the banks that are overexposed to retail lending. Instead, you should be looking at more conservative banks that avoid retail lending and generate the bulk of their revenue from fees or their own internal activities. And that's why lesson number 6 is fees aren't always bad in banking, especially if you can offset those fees with a basic fixed deposit anyway. Lesson number 7. After helping thousands of people solve banking problems, I can tell you there are a lot of helpful bankers out there, especially when it comes to premier and private banking. See, it doesn't benefit a banker when you get denied for an account, or when your account gets closed, or even when your transactions bounce. In fact, it makes the banker's job harder. So when it comes to actually opening and managing your account, your banker is basically your ally inside the bank. They act like a mediator between you, the client, and compliance teams. Now, obviously, a lot of the time, their hands are tied, and they can't help you, like when they're restricted and can't share specific details because of AML and BSA laws, or when compliance makes a decision to close down your account. There's just no reversing certain outcomes. But the point is, the banker is there to help you, to support you, and to make sure that you have a good experience at the bank. So lesson number 7 is that your banker is your ally. And this is something we specifically screen for when selecting banks and bankers to support our clients. And the sooner you realize this, the sooner you'll see them as someone who can help you. Lesson number 8. Now, before you send your banker an invite to be friends on Facebook or Instagram, I do want to temper your excitement. Yes, bankers want to help you. They want to open accounts, but their allegiance is still to the bank, first and foremost. So even though your banker is still your ally, you need to be careful how you approach them. Be smart about your language and ask questions rather than make statements. Basically, once you say something, you can't put the toothpaste back in the tube. That's why lesson number 8 is talk to bankers as if they're compliance. Because anything you say, share, or discuss with your banker can be shared with compliance and can have an impact on your accounts. It's that simple. Now, lesson number 9. A lot of people try to complicate banking. They think a more complex banking stack is the way to successfully open accounts. But in reality, banking should be kept as simple as possible while still delivering the diversification and other outcomes that you're after. We've recently had a client with a web of banking relationships across multiple countries with different banks, investment platforms, digital banks, and basically just a ton of redundant accounts. This went way past having backup accounts. Instead, it had actually become a nightmare just trying to stay on top of all their banking relationships. So we assessed everything for them, looked at the fees they were paying, the services they were using, and even where they were sending money to and from. In the end, we helped them close accounts, open a few new ones, and streamline their international banking. They ended up saving over $100,000 in fees per year, and they now have only a few banking relationships they need to think about, all located with solid banks in stable countries. So lesson number 9 is the easiest solutions are often the best. And just because you don't know those easy solutions, it doesn't mean they don't exist, which is why it can be helpful to have a friend, colleague, or even a team of professionals like us to help guide you to the best options. Lesson number 10. Have you ever heard the saying, an ounce of preparation leads to a pound of success? Well, an ounce of the wrong preparation can lead to a pound of failure too. And this usually comes in the form of bad decision making early on, which then leads to a lot of difficulties opening bank accounts, getting payment processors, or even receiving money into your account. Let's say you register a new company, and you decide to include a word like investment or capital or anything that suggests regulated activities in the name. When a bank sees these words in the name of your business, they might question how the company is going to be used, and that's when things start to go south. In the worst case, people have to rename their company to open accounts. But the most likely outcome is being asked to submit extra documents to prove your company isn't involved in any of these regulated activities. Of course, naming your company is just one example here, and there are plenty of others, like using the wrong phone number, operating your company in the wrong countries, or even sending and receiving money to sketchy third parties, or not knowing how to clearly communicate your source of wealth or even your business description to the bank. And that's why lesson number 10 is plan ahead to make account opening easier. Lesson number 11. This one is about where you incorporate companies. And like I said, I've personally had offshore companies in a number of different jurisdictions, including in Asia, the Caribbean, Latin America, Europe, even North America. And I've banked all of these companies in different countries, both onshore and offshore. But if there's one thing that I've learned, it's that certain companies are a lot easier to bank than others. For example, BVI companies are very straightforward. If you have a BVI company, we can help you bank in almost any country if you have enough money. On the other hand, less straightforward options are going to struggle to bank in reputable jurisdictions. And there are lots of countries that fall into this less straightforward category. Think places like Belize, Panama, St. Vincent and the Grenadines, Seychelles, and Vanuatu. Now, these options can still be useful in certain instances, but for general offshore purposes, I don't recommend them because they're so hard to bank. And I've seen this with many of our clients. Because unless you're coming in with a huge deposit or have existing ties to the bank, most banks don't like offshore companies from these less straightforward countries. So lesson number 11 is your country of registration determines your banking options. And if you end up choosing the wrong country, you could end up with very limited banking options, high deposits, extremely high fees, or a structure that you literally can't even use for its intended purposes. Okay, now the next 3 lessons, they fall into their own special category. Basically, if you see any of these signs, the lesson is find a new bank. But before I share these 3 lessons, if you're getting any value from this video, can you do me a favor? Give it a like and don't forget to subscribe. We have a ton of other videos coming up that are going to help you diversify and open accounts with solid offshore banks. So you want to get notified when they're published. Okay, lesson number 12. I've had this happen to me at 2 banks. In both cases, I knew it was a bad sign and moved my money out before it became a bigger issue. What I'm talking about here are transaction restrictions. More specifically, banks tightening their policies on outbound transactions. And we typically see this when banks are trying to shore up capital, slow down withdrawals. Now, the obvious examples are when banks really clamp down, like when they're trying to avoid a run on the bank. But there's less obvious examples too. And these are the ones that we see most often. And a lot of people come to us when this starts happening at one of their banks. In fact, a few recent clients reached out after they noticed this with certain banks in Georgia. Banks were blocking outbound transfers that they used to allow. They were asking for more paperwork to support transactions, and they were just generally making it harder for people to withdraw their money to a different bank. So the lesson here is, when a bank restricts withdrawals, find a new bank. Lesson number 13, another find a new bank scenario. It happens when your bank sends you an update to your wire transfer details. And that happens when the bank changes its correspondent bank relationship. Now, in case you're not familiar, a correspondent bank is basically a bigger bank in a major country that executes international and foreign currency transactions on behalf of smaller banks. And typically, these correspondent bank relationships, or CBRs, they don't change very often. But when they do, you need to check for one thing in particular. Did your bank upgrade or downgrade its CBR? If the bank upgraded its CBRs, correspondent bank relationships, to a bigger, more reputable bank, that's great news. It usually means more reliable, faster, and even cheaper transactions for you and other customers of the bank. But if your bank downgraded its CBR, that's a different story. Let's say your bank used to have a major international bank as its correspondent. Think JP Morgan, Deutsche, RBC, Lloyds, etc., etc. But you just got an email letting you know that your international transfers are now being processed through a smaller regional bank, or even worse, a high-risk correspondent. If that happens, it's time to move your money, because banks don't willingly downgrade correspondents, and it could be a sign of a bigger issue at the bank. So the lesson is, when banks downgrade correspondent bank relationships, find a new bank. And the final find a new bank scenario is what we're covering in lesson number 14. Now, if you're watching this video, there's a good chance you're searching the internet for banking solutions either for yourself or your company. And maybe you've noticed that a few bank names keep popping up. Banks that seem to be advertising everywhere. Maybe they've even won some awards. Best offshore private bank, best small Caribbean bank, best this and that whatever bank. And of course, a lot of these awards are handed out by quasi-independent pay-to-play publishers. Plus, you might start to notice these banks in new locations, like newsletters, paid advertising, or billboards. Whatever the case may be, when a bank is getting aggressive with their marketing, you need to ask yourself why. Now, there are legitimate reasons why certain banks will do this. And when dealing with fee-based banks, like a lot of the offshore and private banks, this sort of marketing is less of a concern. But when you see banks that engage in retail lending starting to participate in these sorts of tactics to attract new depositors, it's time to reassess your choice of bank. That's why lesson number 14 is when your bank starts marketing aggressively, find a new bank. Maybe the marketing is nothing, or maybe it's a sign of a bigger problem. Regardless of the reason, finding another bank so you can sleep better at night just makes sense. Now, I want to talk about red flags, because if I had known these next 3 lessons when I first started banking offshore, it would have helped me pick much better banks. Starting with lesson number 15. The first time I really noticed this was about 10 years ago. I was opening an account for a different BVI company. This was an offshore holdco, and frankly, it was high risk from a country perspective because it was investing in several markets in Asia that banks typically don't want to deal with. I already knew that because I discussed opening with a few banks that I had existing relationships with, and they just told me point blank that opening accounts wasn't an option. Then I had a call with another bank. I won't say which one, but basically they were very happy to open that account. A little too happy. And I should have paid attention to that during the onboarding, but I needed an account for this entity, so I went ahead anyway. Now, the account consistently had a mid 5-figure balance, and looking back, I was pretty crazy to keep that much money in an account with a bank that frankly didn't give me the confidence that it was well managed or had proper compliance in the first place. And I started to notice other issues too, like issues withdrawing funds, change in correspondence, and they even picked up their marketing efforts. That's when I focused on opening another account at a more reputable bank and moved all of my money there instead. And I'm glad I did, because that bank ended up in trouble about 6 months later. The lesson here is easy account opening is a red flag. Lesson number 16. Have you ever had this happen at a restaurant? You go in, you have a great time, the food is good, the service is prompt, not too pushy, the drinks are great, everything is just right, and then the bill comes. And you can't believe your eyes because it feels too cheap. I had this happen to me when I was visiting Poland. I couldn't believe the price. It was such a good value. But here's the thing. In banking, if you ever find yourself having this feeling, wondering why the deposit that's being requested of you feels so low, it's a red flag. And I'm talking about deposits of $500 or $1,500, because when deposit requirements are so low that anyone can get in, the bank is probably accepting everyone that applies. And there's a lot of risk in that sort of approach, because if your accounts are sitting next to some random person who can only afford a tiny deposit of $500 with offshore banks, but they're sending lots of international transactions, there's bound to be problems. In fact, there's a good chance that the bank will be investigated and your accounts will be frozen. That's why lesson number 16 is super low deposits should be avoided. Lesson number 17. I'm happy to say this is not a lesson that I've personally experienced, because even in my early days, I knew that a bank was only as good as its correspondents. But I've seen many people who come to us for help being impacted by this. So I wanted to make sure I shared it here so that you don't get stuck in this situation. And what I'm talking about is avoiding banks that have low quality and sketchy correspondence. I'm talking about correspondents that aren't even banks, or if they are, they're domiciled in Africa instead of places like the US, Germany, UK, Canada, Australia, etc., etc. And if you find a bank that has correspondence matching this sort of description, it's not a good thing, because no bank wants to use these correspondents unless they absolutely have to. So the lesson here is avoid banks with shady correspondence, because it could spell trouble for your accounts. Now, these next few lessons are all about your relationship with the bank. And lesson number 18 is one that I was reminded of just a few months ago, even though I've been banking overseas for over 20 years. Basically, I received an email from a bank asking for an updated proof of address for the address that they have on file. But the problem was I hadn't lived at that address for over 10 years. So there was no way I was going to be able to provide them with the proof that they were looking for. Obviously, if I'd kept my information up to date and changed my address when I moved, this wouldn't have been a problem. Instead, I had to go back and forth with my account manager, who then had to go back and forth with compliance. Everything worked out in the end, but the whole song and dance was totally unnecessary. So the lesson is keep your information up to date with banks, because it can save you time, effort, and a lot of unnecessary headaches later on. Lesson number 19. Let's talk about sending money. In fact, lesson 19 and 20 are all about sending money, but for different reasons. Lesson 19 is one that I learned when I first moved abroad, because I thought banks everywhere could send and receive international transfers without any issues. It was just basic banking. But what I didn't know at the time was that standard onshore banks, they typically don't deal with international wires. And the bankers at these onshore banks are even less familiar with how to send money abroad. Basically, it's the perfect formula for losing your money, though it's usually temporarily. And it all comes down to bankers inserting details incorrectly, or not knowing how foreign addresses or even foreign accounts are supposed to be routed. So lesson number 19 is test before sending big wires. And if you listen to nothing else on this list, this one lesson can save you a lot of headaches and money. Okay, lesson number 20. It's all about sending wires, but it has nothing to do with your money and everything to do with the bank. More specifically, building trust with your bank. You might think that coming in and sending a massive wire transfer like $100,000 or $200,000 from your bank to another account is impressive, or makes you seem like a valuable client to the bank. But if your bank sees this and it happens unannounced, it's going to have the opposite effect. You'll probably get an account closure notice, be subjected to an investigation, and even be forced to hand over mountains of paperwork to support and justify the transfer you sent. So instead, there are a few ways that you can approach this. I'll share one of the best ways in the next lesson. But the main point here is you need to help the bank understand you, your business, your transaction activities, and even the other parties that you're receiving transfers from before you start sending large wires. And that's why lesson 20 is build trust with your bank. If you do this, it will make your life easier, your banker's life easier, and will result in your accounts staying open for a lot longer. Lesson number 21. Like I said, this will help you overcome issues related to large transfers, but it will also help you overcome basically any issue at the bank. And that's because I'm talking about opening up lines of communication with your banker. Earlier in this video, I said that your banker is your ally in the bank, and that's true, especially when dealing with compliance-heavy banks that ask a lot of questions. Now, going back to our example of sending transfers from the previous lesson, if there are times when you need to send big transfers, like the ones I described, that's totally fine, but you need to talk to your banker beforehand, understand the sort of documents and the proofs that are going to be needed in order to support that kind of transfer, and have open communication to make sure your account doesn't get shut down. On the other hand, if you're planning on sending transfers like this every month, make sure your bank knows this before opening the account, and make sure you're clear about who you're sending money to and why. So lesson 21 is communicate with your banker, and this goes way beyond sending money. It also extends to updating your personal and business information, and even onboarding a new high-value client that's going to be wiring you money. The point is, if you can open up lines of communication with your banker and your bank more broadly to make sure that they understand your banking activities, it will serve your needs better in the long run. Lesson number 22. Let's say you were going to go meet some friends and play a pickup game of football. Maybe it's a bit rainy out, the grass is wet, so you grab your shoes and head out the door. But instead of grabbing a pair of cleats, you grabbed a pair of tennis shoes, and you're going to be slipping all over the grass. Useless, because you grabbed the wrong shoes. Well, this happens in banking too, because a lot of the time, clients come to us with an idea about where they want to open accounts, like a small offshore jurisdiction or a far-flung country. They think these places could work for them, but in reality, they're not countries or banks that will help them meet their goals. So they're choosing the wrong places to bank. And in many of those cases, an onshore country with a large international bank would be a better fit for what they're trying to achieve. And that's why lesson 22 is that the best banking solution for you depends on your goals. And as a quick reminder, if you want our team to help you decide which countries are best for meeting your banking goals for free, you can fill out your free assessment by clicking the link in the pinned comment below. All right, now lesson number 23. We've all had relationships that ran on longer than they should have. The kind where you're not excited to pick up the phone. You delay getting back to them. You conveniently forget that you were supposed to call. Well, that can happen in banking too. And just like it can make sense to end certain personal relationships, it can also make sense to end certain banking relationships, especially when you've found better banks, more cost-effective solutions, or you no longer have the same requirements as you did when you first opened the account. So lesson number 23 is that it can make sense to close bank accounts. And if you've been delaying closing an account, this is your permission to go ahead and contact the bank to do so. Stop wasting your time or your money on accounts that don't work for you anymore. Lesson number 24. I have this one friend, and depending on how you look at it, he's either the luckiest or the unluckiest person you've ever heard of from a banking perspective. See, during the time that I've known him, he's had around 6 bank accounts with different banks in a particular offshore country. Now, he did this to spread around his exposure, which I understand, but only 1 or 2 of the banks that he was using in this particular country would have been on my list of potential options. So I wasn't really surprised when 4 of the banks that he was using got shut down by regulators. Now, the crazy part of this story isn't that the banks were all closed. It's that in every one of those 4 closures, my friend moved his money out of the bank only a few months before. So he either has a sixth sense for knowing when trouble is on the horizon, or he's just very lucky. In either case, lesson number 24 is not all banks are created equal. And unless you have a sixth sense, like my friend, you need to be very careful where you open accounts and hold your savings. Because even if you have deposit insurance and can theoretically get all of your money back, the process to reclaim your funds can be very difficult and time consuming. Which brings us to lesson number 25. One of the first offshore structures I ever set up was a company in Hong Kong. It ticked all the boxes for what I was looking for at the time. I found a corporate service provider, paid all the fees, and got the binder. During the setup process, I also paid an extra fee to have them make introductions to a bank. But there was a problem. The bank they introduced me to didn't want to open an account for my company, not without an absurd deposit. See, this corporate service provider didn't care if I was qualified to open an account. They didn't care if I could make a deposit that the one bank they were going to introduce me to would accept. They just took my fee and said, sure, we'll introduce you to a bank. Which, to be fair, they did. It just wasn't the right bank. And this is something we see all the time. Fee-happy lawyers, CPAs, and service providers charge clients for introductions to banks, knowing they can't help them, just to squeeze more money out of their clients. And it's why we take a very different approach, only accepting clients that we know we can help, guaranteeing that we'll get you a bank account open if you work with us. But if you're considering our services, you're probably also looking at lawyers and CPAs who claim to be able to help you with banking too. So lesson 25 is don't rely on high-priced lawyers for bank introductions, because they don't know which banks will actually accept you or your entity. And they don't understand how banks look at applicants, assess their profiles, and make a decision about onboarding. Okay, lesson number 26. We had a client who wanted to open a bank account in the US for his foreign company. Now, most people will just tell you that's impossible. It's not. We've helped companies from many different countries open US bank accounts, including many popular offshore jurisdictions. But there are only a small number of banks that are willing to even consider applications from foreign companies in the US. Now, this client was on the fence. He said he needed a few months to consider his options, even though, according to him, he really needed a US bank account. 3 months went by, and he decided that he was ready to move forward. But there was a problem. The deposit requirement at the bank that he wanted to open with jumped up from $50,000 to $250,000 as a hard minimum, and this client couldn't afford the new $250,000 deposit level. So the lesson is, open the accounts you need when you can, because internal policies, minimum requirements, and other factors that can impact your banking options are constantly changing. And even though you can open an account today with a bank that you want, you might not be able to qualify a few months or even a few weeks down the road. And that brings us to lesson number 27. But before I share this final lesson with you, since you've made it this far in the video, don't forget to give this video a like and subscribe to the channel for future videos. And if you have any offshore banking lessons you think I've missed, don't forget to drop a comment below and let us know what it is. Okay, lesson 27. There are certain countries that everyone has an opinion about when it comes to banking, myself included. Countries like Switzerland, Georgia, Belize, Panama, the United States, and a few other places. And for some reason, other people tell you to avoid banking in Switzerland, or avoid the US and even Panama. And instead, they tell you that you should bank in Belize or Georgia. Now, personally, I think that's completely the wrong approach. You should bank in Switzerland, the US, and Panama if it makes sense for you. And frankly, if you can bank in Belize or Georgia, you can almost definitely open accounts with significantly better banks in much better countries. So in most cases, I wouldn't suggest Belize or Georgia for most people. But here's the thing. Blanket statements about a particular country, whether they're from me or someone else, they don't matter, because your profile, your specific needs, where and who you send money to and from, it's totally unique. And the specific countries and banks that are going to match your profile, they're unique too. There's no one-size-fits-all solution, at least not usually. So lesson number 27 is choose the best banks and countries for your profile and your requirements. And if you want help choosing the best countries for you or your company, you can fill out your free application right now by clicking the link in the pinned comment below. And like I said, it takes 2 minutes to complete, and our team will get back to you within 24 hours, letting you know your options. And when you're done, come back here and watch this video where I share one of the most interesting banking hubs that basically no one talks about, but they should. So I made a video about it. I'll see you over there right now.